stock of the day, I thought we'd take a look at Macquarie Bank, updating the 2023 financial year results. The bank has a capital surplus of $10 billion. It's only just announced this morning, saying it's maintaining a cautious stance, conservative approach to capital funding and liquidity. That's big coming from Macquarie, which is usually quite entrepreneurial. Further said the business, it had $774 billion in assets under management. Carl, what did you think of the update? And what do you think of Macquarie at the moment?
Well, I think Macquarie have done so well.
Yeah.
And, obviously market volatility helps them in their markets-facing business. They've got a banking division now, which is really starting to establish itself and compete. But certainly with the markets-facing businesses, so the commodities and the capital markets, the question is whether the best is behind us. And maybe this update is starting to prepare investors for that possibility.
Look, bit of a warning sign. Up $4 this morning, I think it is too.
Well, it's come off a little bit of its highs. It's sort of about mid-range at the moment. And what will be interesting to see where it closes on the day, because we've got that initial response. Is that the update? Is it the fact that the Nasdaq was up 4% and maybe the end of the world isn't happening, that we're going to have continued deal flow and all these wonderful things? Longer term interest rates have been sort of edging down. Look, they're deal makers and deal facilitators. So when interest rates go up, it gets harder for companies to make those deals economic based upon higher rates. When people are uncertain, they tend to trade less. And this all flows through. So maybe they're softening us up for it. I know, look, I don't want to speak for you guys, but we kind of do this every day, and it's not hard to get a bit pessimistic when the macro picture changes. Maybe we'll give them the benefit of the doubt. So when I said it'll be interesting to see how the market responds, I'm always interested on news results to see how the market responds. If we close back towards the lows of the day, I mean, it's starting to just come off its highs last time I checked, that would be interesting, because maybe that first pop is more for external bigger market moves, and then we're starting to react to the actual announcement. If we close near the highs, then it's happy days.
Okay.
On the chart, look, I've been a bit of a skeptic on Macquarie on the chart. We haven't exactly been, look, it's not a buy for us on the charts. If anything, we've been telling clients to lighten the load over the last few months in anticipation of some of these factors. I wouldn't say at the moment that call's going so well, because it's to be fair, it's rallied off those lows. So I'm kind of moving back to more of a neutral position now. I'm looking at that 180 is around about a balance point. It's actually, our fair value target is 178. So for us,
almost on
it is. For us, the rewards and risks are balanced. Okay. So I have to then question, if reward and risk is fairly balanced, we're not seeing that upside, why would we be holding it? If we're not holders, we tend to be sellers to go find a better opportunity, something we've got high conviction on. So on that basis, and I know it's quality and I get it, but on that basis, I'm a sell.
Okay. Sell on Macquarie. Mark?
Yeah, no, I'm in the complete opposite camp to that. We've been an accumulator of this through this whole sort of panic downturn. Look, 53 years of track record overall. The new, which is not new CEO now, but a great management team. And look, we've seen the banks in the US overall. The ones with the quality trading operations have actually, really, smashed the expectations from Wall Street. So, and Macquarie, Miski World Banks is number one since it listed. So over that period. And look, return on equity has basically been in that top two, for on a decade or more. So it's the sort of thing that they've bought up a whole heap of gas assets in the UK. If only all companies reported like Macquarie, they tend to under-promise and then over-deliver. And continually pull a rabbit out of a hat for the trading desk with the energy, moving all that gas and basically salvage their result, but they tend to consistently do that. It's not really just a one-off. So of all the investment banks globally, realistically, these guys have got half a century of track record of over delivering. So it's everyone gets upset when it's the only thing in the world where people get upset that the market's on sale. Right. This is one of these bargains that we have as a staple.
Is it a bargain?
Yeah, absolutely. Yep. No, okay. we're happy to accumulate. It's just one of those staples for our portfolios.
Okay.